Hey guys, hope you're enjoying your Sunday. There have been a ton of headlines coming fast and furious on the American banking system. And I just wanted to jump on real quick to talk to you a little bit about some of the key storylines that we're watching. But big picture here, one of the reasons why this matters is that when we're talking about the American financial system, it's one of those rare times that we really can see how interconnected we all are. Even if we bank at different banks, even if we don't even use the bank, even if you're not American. This is one of those times where this story that we were watching specifically out of California suddenly became such a larger story that it now has grown to the point where the US government is saying this could impact our entire financial system and we got to do something. So let's just take a breath on this Sunday afternoon and talk a little bit about this. First, a personal disclaimer. I don't know if you can hear that. I'm on spring break with my kids, so they're watching a movie in the other room. So if you hear a little bit of that, that's just what's happening right now. Number two, anytime that I say I'm going to take time off, it's sort of like when you've had a perfectly peaceful flight and you get up just once to use the bathroom and suddenly there's turbulence. So you should just know anytime it's like, maybe I'll just try to step away a little bit, there's going to be a massive story. So let's talk first about the banking system and a couple things that I've learned in my time as a journalist. One of the first major news stories that I covered on the national stage was the financial crisis dating back to 2008 or so. And this was such a learning experience because I realized a lot of my preconceptions about the banking system and how it worked because I was a consumer, not necessarily covering it as a journalist, were wrong. So I think we should start there. One of the most important things that I learned is that money is just simply moving all the time. It is constantly in motion, and that's very different than how we may feel about our money. So if I have a certain amount of money in the bank, let's say $100, I think the money is sitting in the bank. In fact, I may actually use that phrase, that the money is sitting in the bank. It's just going to be there. And I expect it to be there when I come asking for it. But the reality is that a bank is making money by making money off of the money that it's holding for a certain period of time. This gets real complicated and it's probably best covered in an interview. But if you understand that key fact, then you also will understand if a ton of people show up to a bank asking for their money at the same time, their money may not actually be there for them to withdraw it. And that's essentially what happened to this bank out in California, Silicon Valley Bank. It's been around since the 1980s, but if you're not in the tech industry, you're not a startup, it's not a bank that maybe you and I would turn to open an account. One other important reminder, you really want to bank with a bank that's FDIC insured, which means that the US government is going to insure, essentially, your money up to $250,000. That's per individual. It can change if you're a couple. It's just something to be aware of. That's really important because if you have more money than that in a certain bank, that means some of that money may not be protected if something goes wrong. And we saw something go wrong at Silicon Valley Bank. Silicon Valley Bank is unique. Even though it's been around for several decades, it caters to a very specific group of people. These are going to be, tech companies. And it seems that they also had a sort of customer relations where they would say, and this is one thing that was detailed in the Wall Street Journal, put all of your money with us. Put $30 million with us. This was detailed in one report. And then we're going to extend credit to you. We're going to give you loans, cheap loans, but you got to put all that money with us. But we know not all of that money is FDIC insured. So as the story goes, in the middle of last week, there's a couple different reasons why apparently this started to happen. People started to get worried about whether or not Silicon Valley Bank was going to be stable. And what happened? Just like you and me, we're on our smartphones. People started to withdraw their money fast, quickly. This is spreading over text messages. This is spreading over Slack, an instant messenger that's often used. And people are withdrawing their funds. And what eventually took place is what has been described as an old-fashioned run on the bank, where the bank did not have enough cash, readily available cash. Because remember, the bank is using the money that they have to invest in different ways. They didn't have it to instantly hand to everybody that needed it or wanted it. And so they had to basically shut down. Regulators had to step in. And now we're going to fast forward to what we're seeing this weekend. When a bank collapse happens, which is what we saw in a 48 to 72 hour period, happened very fast, there's all sorts of unknowns. One is whether or not anyone's going to see any money ever. And so for some of these companies that were completely reliant on this bank, whether that's right or wrong, because we know that they didn't have all their funds insured, there's a huge amount of unknown, which means, will any number of these, hundreds of companies survive, what will happen to these thousands, tens of thousands, hundreds of thousands of people? There's also this question about just human nature. When one bank collapses, there's a question about, well, are these other banks stable? Should I be withdrawing my money out of all? There's a question of what's called contagion. Is it almost contagious that what happens in one particular area could spread across the entire financial system because of a sudden lack of confidence? These two reasons are one of the reasons why the US government stepped in. What I'm about to describe gets a little complicated, and quite frankly, it just broke over the last hour, so we don't have a lot of details. During the past financial crisis that we've seen, where there has been a question about financial stability of the entire system, because again, what could happen at one bank could potentially happen at others, or maybe spotlighting a weakness that other banks have exposure to. What regulators can do is they create what's called a lending facility, which is something like you never really hear unless you're covering these sorts of stories. Essentially what they're saying is that they're going to provide loans, they're going to figure out a way to basically make sure that everyone gets paid. I mean, it gets very complicated, but that's the bottom line. Now, just remember, when the US government's doing anything, they're doing it representing the American people. And so this is where it becomes a slippery slope about who gets that backing, when does the government step in, and why. You may have heard this term before, too big to fail, that there are some banks in the American banking system that are simply too big to fail, and therefore, if they failed, they could just pull down the entire economy. That's a term that I expect to be discussed more in the coming week, because this is going to bring up the question about, well, which banks are too big to fail? Is it the top 20 banks in the country? If there was the 22nd bank that this happened to, would the government then step in, or would the contagion not be that bad? So there's going to be a lot of debate about this. But the fact that the US government did this on Sunday evening is meant as a message to the banking system overall, not just here in the United States, but elsewhere in the world, that the American banking system is stable and safe. And therefore, don't do anything crazy or rash, because the more emotional, or the more that people are dealing with fear builds upon fear. You have different domino effects that can happen. I mean, there's kind of the basic bottom line to that. And there's the argument for connection. We may not have any exposure to Silicon Valley Bank. I don't have an account at Silicon Valley Bank. I'm not out in California. I don't have anything personally related to that, or so I think. But remember, banks are doing a lot of business with each other. So we don't really probably have a full understanding of the tentacles of this. And that could be the argument for the US government to get involved. There will be those purists that say that the US government should never get involved. There's rich debate on both sides. I think it's important that you know that debate does exist. One other thing I just want to throw out there, I think is important that we've seen together, and it's something to be aware of. During the pandemic, the American consumer, a lot of American companies, suddenly started to just hold on to a lot of cash. It was easy to get cash. I mean, first of all, we weren't doing a lot of things, right? We weren't doing the travel that we used to do. We could save a little bit more. We weren't leaving the house that much. I mean, it was just a totally different time. Also, interest rates were really low. So if you wanted a little extra cash, it was really easy to borrow money, very inexpensive to borrow money. So there's just like a lot of cash around. Well, things have changed, and it's changed specifically also for companies that are in that startup period that need money and need cash. Some of that cash that was easily coming from investors is not coming as easy anymore. Getting a loan is more expensive. The US consumer personally also seems to be ratcheting up more credit card debt. So we're seeing a change in the economy. Because of these shifting dynamics may require different strategies. And so that's one of the things I'm going to be paying close attention to. So going into the week, here's what I'm going to be watching. We need to get more details about what's going on with the federal government plan to provide this assurance to Silicon Valley Bank and its customers. So we're going to learn more about that next 24, 48 hours. There's going to be a lot of debate about that. We'll watch that. We're going to watch the stock markets. We're not as curious about where things open. Where we're always watching is where things close. We want to see if the markets kind of get hyper in the morning, do they calm down in the afternoon? What are other bank CEOs saying? A lot of banks are going to try to come out and talk about how confident they are in their current situation. We expect that, but we want to listen carefully to what they are seeing and what they are willing to say about what they're concerned about. That is going to be important too. So as we finish up here, here's the question. Is this just a one-off, very unique situation happening at a unique bank in a specific part of the country with specific customers? Or is this a bigger story that applies more broadly across the banking sector because of multiple dynamics that are happening at the same time, including less easy money, higher interest rates? That's really going to be at the center of this. So look forward to your questions on this. It's never easy to talk about any sort of banking collapse because it's scary. Have you ever seen It's a Wonderful Life? We think back to some of these very salient images of what it looked like based on Hollywood, what a financial crisis looked like based on our own personal memories. So we just have to be steady, consider some of the things that I discussed, and I look forward to your questions and hope I can be helpful during this particular time. One other just quick personal note on this. There in these stories can be a lot of class warfare, like who has $30 million just to put in a bank? You know what I mean? It's like, that sounds awesome. Who gets to do that? All these different startup companies that had a lot of cash, fancy cafeterias and things like that. They're innovative and they're tech gurus, like we all have the stereotypes, right? Being part of a startup company is where American innovation can bloom. We can all benefit from these companies that, if they get the right amount of cash to accelerate quickly, can literally change the way that we live and improve our lives for the better. So we have to be careful about, passing judgment, because it's very easy to do, especially with stories like this. And I also just want to make note of this. In the past 5 years that I've had Smarter News, I've had a lot of people come to me and say, well, why don't you go out and raise money? I'm a startup. I'm a tech startup. Go out and raise money. I could raise a couple $1 million. Accelerate Smarter News real fast. Get this whole team together. Get a good office in Austin. I could look real professional. I could get this more well lit so I don't look at you like a crazy person on Instagram like this. It was important for me not to do that for a couple reasons. The first one is any investor could then cast a long shadow. So you could question whether or not I'm a nonpartisan news source. What happens if that investor like to support President Obama or President Trump? You might look at me like, is she really nonpartisan news? So it had to be pure. I had to bootstrap it myself. I'm still bootstrapping this myself. But also, this is important. I didn't want someone else to put a value on my company. The value of this company is not any dollar amount that I could pay myself. It's you. You are proving that this company is amazing and worth more money. Like, there's no price tag for that. Like, your presence at Smarter News is more valuable to me than any couple $1 million that I could go out and raise, because that is accessible. This is not. This is real. This sort of connection with Smarter News and us growing in front of you and doing things that sometimes work and sometimes don't, and your trust in us, that is super powerful. The rest of the stuff I believe is going to come. I believe it's going to come. But what we've created is unique. And it's been strategically created that way, where I decided against doing that. Some would say to my own detriment, but I didn't think it was right. So thank you.